Hi everyone, welcome to today's video. We all have needs, wants, and obligations, but the means to fulfill them is always in short supply, that is money. The good news is, with proper planning and disciplined execution, one can easily fulfill the needs, wants, and obligations. And that's gonna be the theme of today's video: how to identify one's financial goals and plan for it. I'm going to introduce a framework called UORW, that is Uncertainties, Obligations, Retirement, and Wants. It's a framework I created for myself and I found it quite useful to define my financial goals. So I thought I would share it with you. Let's start with uncertainties. Of course, we all live in uncertain times. Just 2 years ago, no one thought a virus called COVID would sweep away lives of many across the globe. Many lost their loved ones, lost their jobs, and many businesses went bankrupt. It significantly altered the way we work, we travel, and we do business. So it is very important that one plans for uncertainties. And the first uncertainty we should all plan for is job loss. During COVID times, we saw how the businesses that got impacted by COVID had to lay off many of their employees. So one should create an emergency corpus to manage life during unemployment period. The corpus should be at least equal to 6 times the monthly salary. The second uncertainty one should plan for is unexpected healthcare expenses. During COVID times, the healthcare expenses went through the roof and many couldn't afford. As a result, they lost their lives. And many had to borrow money to pay for their healthcare expenses. As a result, ended up in debt. If only they had taken sufficient medical cover, they could have avoided the situation. How much medical cover one should have? In India, for a family of three, in which the parents are in mid to late 20s, at least 5 lakh to 10 lakh coverage should be there. And as one ages, so do the medical expenses. Hence, one should increase his or her cover as they age. The third and most important financial goal one should have is having sufficient life insurance cover, especially if the family has only one breadwinner, then this is even more important. How much cover one should have? The thumb rule is at least 10 times one's annual salary or 20 times one's annual expenses. One important thing one should keep in mind while buying an insurance cover is you should not mix insurance with investment. You should always buy a term insurance and not any other endowment plan that blends insurance with investment. Now let's move on to obligations. As parents, it's important that one should provide a platform for the kids to build their future. And what better way than giving them access to quality education? Unfortunately, quality education in India is an expensive affair. Without planning for it, it is going to be really difficult. So one should always plan for kids schooling well in advance and plan for kids higher education well in advance. So the planning for their schooling should start right after their birth, and planning for their higher education should start as soon as possible because it's going to be a huge corpus. The next obligation is children's marriage. It may sound conservative, but in India, parents save for their kids' marriage well in advance, either in the form of gold or money. Now let's move on to the third section of the framework, that is retirement. We saw in detail how one should calculate the retirement corpus and how one should save for it in our previous videos. If you haven't seen the previous video, I've given the link below. Please go and watch it. After planning for uncertainties, obligations, and retirement, one should reward himself with a planning for their wants. It could be buying a car or house or a trip to exotic locations abroad. With this, we have identified goals under the four sections of the framework. After this, we have to assign time period for each goal so that we are able to choose a asset class to build a corpus for meeting each goal. The time period could be short, mid, or long term, depending upon the goals. For unemployment, one should plan at least 6 months in advance. On the other hand, for retirement, one can assign a time period of 30 to 35 years, depending upon the age. Similarly, for education, one can plan for their schooling every year or plan for their higher education 15 years from now. Now we have identified the goals and assigned a time period to it. Now how to save for it, which asset class to choose, and what should be the rate of return. To know more, watch out for the next video where I'm going to explain how to choose an asset class depending upon the time period of the financial goal. Hope you found this video useful. If you like it, share it with your friends, and if you have any comments, leave it in the comment section. I'll get back to you. I'll see you in the next video. Till then, take care. Bye.